see where Roger's at. Time for Roger to show up. Let's see where Roger's at. Hey Kenny, how's it going? This is just going to be a one-on-one mentoring session with Roger. So I'm not going to be answering questions once Robert enters the room. So if you guys want to sit in and listen to the questions he has, you guys are more than welcome. But this session is strictly a one-on-one with me and Roger. So I'm just waiting for him to show up right now. Once he shows up, we're going to get started. Some people said I got dark. Yeah, I just came back. I played a 19 hole right now. I mean, 18 hole, sorry, golf. So I'm all dark from the hot sun outside. Just waiting for Roger to come in right now for his session. So we got right now. Let's see. I think he's on his way in. Some people said I got 2 shades darker from this morning because I was just on the live session earlier today. I didn't really take any trades. I just took that that breakout that we were playing around with, but I didn't necessarily hold on to it. All right, here we go.
Hey, Shawn.
Hey, Roger, can you hear me?
I can hear you. All good. Can you hear me?
Yeah, I can hear you. How's it going over there?
I'm doing well. I'm literally in my office for the first time in 18 months. I had a meeting today for the first time. So
all right, yeah,
it's a little bit
everyone's going back to their normal daily process. So it's different.
It's a little bit, yeah, it's a little bit surreal, to be honest, because yeah, I haven't stepped foot in here since March 2020. So like it's good though.
Wow, yeah,
How's your golf?
over here. It's been good. I actually just got back right now. I was playing golf this morning after the session, and it was nice. It's just nice being outside as well for the weekend, because this week's been kind of crazy. I don't know if you were trading this week, but this week has been.
I got crushed this week because I thought, like, I've been trying to diligently study, take notes, like watching mentoring sessions, listening. But as you've always said, like the trade psychology thing is really the key discipline, to not trade, particularly when you've taken a loss, and not to feel like you need to get it back right away. So, because like I have a bunch of questions, I literally have on each one of the strategies, but the core of the strategy is pretty simple. I mean, there's nuance to it, but when not to take something, to me, should be pretty clear. And when you say something's risky, I should know either I don't take it, or I reduce my lot size, or I have a tighter TP stop loss. But I've just had no stop losses, and those are the things you just get crushed on. And it's so, because I've also watched some YouTube videos of other traders, and like, you have to set stop losses. Like retail traders get crushed because they just keep hoping and praying something's going to turn around, and that's what blows their account. So I'm
yeah, and that's the main thing. It's really like you said, the strategies are very simple. It's really simple. It's about managing risk properly, and knowing when to pull out of a trade. Because I've seen, even this week, there was a couple people who took trades, and they were wondering why they had such a big loss. And I was like, okay, let me see what you did here. And I looked at their trade, and they held that more than double or triple past the stop loss. And if they would have just cut their losses at that point, they would have had a minimal loss. But then due to the fact that they decided not to cut it, they ended up having such a huge loss, and it could have been totally avoided.
Yeah, and it feels like, so I basically just put 20K in an account. I'm doing it through straight TradeStation, which actually doing it through trading views is pretty easy. As you said, it's not the US 30 currency, so sometimes there's slight differences in K2 momentum, but if you call it, it should be fine. Like if I'm still placing the trade on the futures, it still should be fine. But so I've burned about 3K, right? But
Okay.
if you said, unfortunately, I've been unlucky in that a couple of your misses, which are very few and far in between, those I've taken those. So it's just been about timing. But I was saying, Kip, the cancer doctor,
Oh yeah,
his
yeah.
friend Brian, okay, who's my friend, told me about it, right? Because that was like the chain. Like Kip told Brian, and then Brian told me. And I was
Gotcha.
talking to Brian yesterday. I'm like, this is like the long haul. Like I'm fine. Like I want to make mistakes now and learn it, and then it's not about trying to get back the $3,000 in 2 days. It's about learning the system. So then if you're not on the live stream, but you have the strategies, then I should be good, right? Like it's not just listening to you. I want to really understand what I'm doing.
Oh, definitely. Yeah. No, like for me, you guys have seen how I trade. Like I'm very conservative. I only take like, one or two trades. And you'll see these other people in the group that truly understand the strategy, understand, when to trade, when not to trade. And they're locking in like 3 to 5 times more than what I'm doing daily. But I'm content with what I'm making. Like I'm not trying to be a billionaire by next year. I'm
Yeah.
okay with making, X amount of money every year and consistent where I don't have to stress about, having these big losses. Like I'm literally having just a consistent win daily, and it just adds up at the end of the week, end of the month, and then it just keeps compiling throughout the year. So
Yeah.
for you, you could definitely, yeah, once you get everything down, and your trade psychology is down. I know that you still work your normal day job, so like it might be difficult for you to be trading the same time as me. So once you actually get it down, there are times where you can trade at night. Like I'm not saying that you can't trade at night. I always tell people to just trade with me in the morning, but that's for the
Yeah.
people who are too big of a risk taker, right? There's some people that they know what they're doing and they can trade at night, and that's
Light went off in
completely
here.
fine.
Sorry, the light went off in here. Like I'm not moving to the light. The light went off in here. Uh, yeah, I mean, basically my plan is, so I'm really only going to trade for the time being for like 45 minutes, 6:30 to 7:15. I have a daughter. I have to help.
You
I
got your
help in the
hands
morning
full.
get her ready, right? So, but I know for me, 6:30 to 7:15, which is like, okay, we'll see where the breakout is, maybe catch some scalps. And then I just like the idea of, I mean, I'm 51, I've been with the same company for 23 years.
Yeah.
I like what I do, but I got my Series 7 was my first thing out of college. My dad was an old school stockbroker. So I was always had in me a little bit of the like
You
the
already had
investing.
yeah, you had experience in it basically.
Yeah. And so when Brian told me about this, and then also said there's a system, and that it mentioned you, I'm like, this sounds like exactly like something that would be fun to do. And you just never know what's going to happen in life. And you go, if you can get good at this, as you said, you can do this full time and
Mhm.
without a lot of stress. And that's why I'm really pursued it, because at 7:15 to be done with it, like I don't have to worry about anything. I'm done. You're not holding on to anything. And so anyway.
Yeah, exactly. And that's exactly how my schedule is. Literally, I only trade from 6:30 to 8. And after that, I kind of just do whatever I want. Like today I traded in the morning, I went to golf right after, and then the rest of my day is pretty much open if I ever really need to do anything. But here's another thing. I don't know if you covered this strategy, but this was the daily strategy that we used to do during the fall, winter, and spring. I don't think you
I
run it.
saw, to be honest, like I snapshotted it today, but then I had to go. I think it was right when I was logging off, but I did see you mention that today. Yeah. So
Yeah.
talk to me about that one.
Yeah, yeah. So that's going to be pretty good for you too, because the thing is, since you're only trying to trade within, a certain amount of time, you can probably take the breakout, and then if you do get the daily entry, generally, I'll share on my screen. You can see my screen, right?
Yeah.
So it's on the 10-minute time frame. Basically, for this strategy, it's it's like probably the easiest strategy that you can cover, and it has a very, very high win rate. So the thing for this, for the breakout, it's generally between 6:30 to 6:35 because you just
Yep.
want a quick breakout. For the daily entry, you can take the first valid 10-minute signal from 6:30 until about 9. So that's usually the cutoff for when you don't want to take it, because After
Right.
night, that's generally when price starts to reverse in the opposite direction.
Right.
I'll put the requirements right here. And I'm recording all this, so you don't have to like, if you don't need to rush to like copy everything down. I'll give you the link later to
Okay, cool.
to rewatch it if you ever need to. But yeah, this would be the daily strategy. So for this strategy right here, it's pretty much
Mm-hmm.
foolproof. It's literally you're just looking. So what you want to do is you want to wait for the market to open at 6:30.
Mm-hmm.
So I'll just
Yep.
mark it right over here at 6:30, and we'll just rewind to that area there. So all that you're really looking for, and the only reason that we stop using this is because in the summer, like the market moves in season. So during the summer is like the slowest time. That's generally when
Right.
the majority of
People are on
investors are on
vacation, and
vacation.
there's just yeah.
And it's all retail traders. So that's why the market's moving kind of funky because nobody knows what they're doing, right? Like all the retail traders are kind of just pushing price up and down. But as the investors come back into the market, they start pushing price in the direction that they want it to go. So you can kind of just follow
Mm-hmm.
what they're doing. So for this right here, basically all you're going to be doing is you're going to be looking for entries after the first candle. So the first candle is going to be the 6:30 candle, and this is done on the 10-minute time frame. Once that candle is passed, you just look for the first valid signal. So for example, right here, we
Mm-hmm.
have a valid signal because it's a sell signal with a red bearish candle within it. So with that said, you can enter after this, and this is a bigger move. So for the breakout, we're only going for about 500 pips. For this, we're
Right.
going for 1,500 pips. So because it's an intraday strategy, you're expecting it to run the entire session. So for this right here, you'll just change this to 150. I know there was a confusion before we were talking about this with the points, ticks, and pips.
Yeah.
Like I explained before, the pips are just points in percentage. So
Yeah. Yeah. I got that. Yeah.
you got that down. Okay, cool. So
Yeah.
that's all you need to do. You'll do 150, 150 each. It's a 1-to-1 risk reward. And this the win rate for this strategy is very high. It's about I'd say it's about I think the last time we back tested it last year, because this is when we were using it a lot, it was about an 86% win rate. So you can literally just take this trade and let it run with a smaller lot size to just, this will be like a safety net trade. So say if you don't do so well on your breakout, this will just catch your trade where you can go for the same amount, if not less. So this is pretty much it. You have this set up and then you let it run for the rest of the session. And there you go straight down to the bottom like that.
And will you, Shawn, in that? So, for example, let's just say today. Let's say, well, I guess you're taking it only after. So once you on the 10-minute chart, once you have a valid K2 momentum, and once again, this means let's just say we're looking for a sell. It's a red candle and the red momentum, right? It just has to be. The candle has to be red and the K2 momentum has to be red, but it doesn't matter what the trend meter is. It's just
exactly
right.
None of that at
So,
all.
and,
Just,
so right, yeah. And then
go ahead.
So as soon as from, let's just say like today, it didn't happen until 7:15, right? As before I was about to log off. It was like, okay, we got one. So on that one, I would place the trade with the fixed TP and a stop loss. And then what I close out before if it didn't hit the TP or stop loss before the New York session closes, would you close it out or would you just let it run until
Friday,
it hits?
For Friday.
No,
on a regular day, I would, because the market still goes, after the New York session.
Yeah.
So it just continues going. But for a Friday, I would close out before, because the thing is, you really don't know what's going to happen over the weekend. Like a ton of things can happen.
Right.
Like be like another COVID breakout or something like that, and the market just goes wacky, or some sort of war breaks out somewhere and something happens. So I never really recommend people holding it over the weekend, especially if you're taking a bigger lot size. It's different for stocks. Like if you're investing in stocks, it's completely fine because you don't have 10% of your account in one position. You have less than 1%. But for something like this, because we're risking 1 to 3%, you definitely want to be out of the position to be safe, because things can go in your way or it can be complete opposite. So it's not something that I would recommend risking, with regard to risk management.
Right. Because I think for me, I think I'm trading the futures, right? So I think for me on trading views through TradeStation, I think one unit is half of a half lot.
Mm-hmm.
So which means a 1,500 pip move for me, if I was trading, that would be $750. That would be my max exposure on the downside, I think.
Yeah, that sounds about right. Because normally for me it'd be 1,500. For you it'd be half.
Right.
150.
And if I was going to close out on Friday, would I close out right when the New York session ends, or would you let it run until just the end of the day, or do you have any, like, when would you want to be out?
On a Friday, I would usually just trail the position. So like say for example, here as it starts to go down,
Uh-huh.
different ways to do it. But for me personally, I would just wait for a candle to close. And as it closes, I just follow my stop loss down. So like say this candle right here closes down here, I would just move my stop loss to maybe somewhere in profit below break even so that you can cover your fees. So if it does come back to break even, you can, it's just it's a risk, it's a trade that you just took, but you didn't lose anything on it. So I would do that. And then as price continues to move down lower, I would just move your stop loss even
Right.
lower, continue dropping. And then for example, right here, you can see where it kind of swings back up. It probably would have stopped you at half profit. And then I would just call it a day from there.
Got it. So if let's just say price was right where your red line is right now, and it's 5 o'clock on Friday, then I probably want, if I'm like going out to dinner or something, I probably just close out and go, okay, I'm done. I'll take my profit. Or if it's in a loss, I'll just probably, just when I know that, oh yeah, it doesn't necessarily have to be at the close of the New York session. It's just, you don't want it going into Saturday or Sunday. So,
Yeah, and you
okay.
don't want it to go to like 2 hours before market close, because if you hold it till then, that's when the market like really dies down. Like you can see right here the volatility. If you hold it till like I guess 12 o'clock my time, which is 2 hours before market close.
Yeah.
Market.
And I'm on your time frame, by the way. I'm in California. So
Oh, okay. Well, perfect. Yeah, I wasn't sure if you were in Hawaii with Kip or like somewhere in
yeah, no,
Canada.
up in Manhattan Beach. Because
Nice, nice.
you're in Newport Beach?
Yeah, yeah. I'm in Newport Beach, Irvine, like around the airport, like right
Oh,
on,
cool.
so I'm like right there. Yeah, so we're not too
Yeah.
far away, but yeah, basically around 12 o'clock our time, probably 11 to 12, I would probably pull out because around that time, that's when price either, there's one or two things that'll happen. Price will either just go flat because everyone's already out of the market before you are. But if you're still holding on to it, people are getting out. Like you can see this big drop right here from 11 to 12 because everyone's selling off for the weekend. So
I
you
can
kind of
hear
don't
you.
want you kind of don't want to get caught in that area. Hey Roger, can you hear me? Sorry, I think we have a connection error. Let's see. We'll give it a second for it to refresh. Let me check the connection over here. You're frozen right now, Roger. Let me see if I can message you on Telegram. Hey, Roger, looks like you made it back. I think you need to unmute yourself. You muted yourself right now.
Yeah. For some
There you
reason, I can't get on my like work network, so I'm doing my hotspot. I don't know what's happening. Anyway, so just to be clear, so if I do the daily strategy on Tuesday and I enter the trade at 7:30, I can just let it run. I can leave it overnight, whatever, until it either hits TP, hits stop loss, or when I'm just like, you know what, I've made profit or taken a loss, I want to be out of it. But if it's Friday, if I do it Friday, I pretty much want to be out by 11 or 12 on Friday.
Exactly, yeah, because you don't want it to be bothering you all weekend if you're like thinking
Yeah,
about the trade. Because it's happened to me before where I let a trade run. I'm like, okay, this is cool, and then I see something happen in the news, like especially during COVID, and I was like, oh crap, I should have just closed that trade out. And
cool.
you just don't want it to bother you. It's a personal thing, but for me personally, I would just, I wouldn't stress over, and I would just close out profit or for a small loss, or whatever situation you're in at that time.
Cool. I think that probably the strategy to me, which that would be great to go over next, would be just the snipe strategy.
Oh,
I
yeah, perfect.
can't. I'm trying on my trading views. I can't get the, and I've tried. the shaded zones, right? Like when I click that thing, it gives me two lines, but it doesn't give the shading in between. So I don't know if I need that.
It's
But
not really necessary, but it helps. I know you've seen how my screen, it kind of like, it makes it a lot easier to look at. So
yeah, let me see if I just look at your settings, because there's just been some wonkiness on mine. But let me just see if I can get mine to look like yours with the zones.
yeah, so the way that I get the shaded box within the zones is that I draw it
Mm.
myself separately. So that might be the thing.
Oh, okay. So if you can you show me the view, like if you started from, okay, so that's what you get with the trading view settings. And then what you do is you'll just use the tool to, let me see what you do to draw the shading.
Yeah, so this is what it looks like normally. And
Right,
then
yeah, so that's what mine looks like.
and it's kind of messy, right? Because they overlap and stuff like that. So in order for me to clean that up, what I do is I click on this button right here, geometric shapes. I click the
Yep,
drop down. I go to rectangle.
yep.
And then from there, I'll just draw my own rectangle over it like that.
Got it. And so it's basically like if you go to the bunch of greens stacked in the middle, because
Mhm.
obviously as they get tighter, it can be, might be a little bit more challenging to see
Yeah,
what's,
these right here, they start to overlap, right?
yeah, because they should, you're connecting, they're ending at the same time, right? So it's they're never, you're connecting ones that are ending at the same time, the top and bottom, right? Because those
Exactly.
ones, yeah,
Yeah, and if they overlap, I just draw one big one because they're gonna be zone, like you can do them separate if you really wanted to, but if you did that, it would have been the same thing. Like if you would have drawn the small zone right there and then drew a bigger
right,
zone
because you're not
there.
doing it, right, you're doing it across the chart as opposed to in time sections.
Exactly, yeah. So
And
like, oh, go ahead.
I was just going to say, you're just drawing the red zones, because the green, the green in terms of, because these are liquidity zones. Is that like
Not
what?
exactly. Yeah. So the SR just stands for support and resistance. So basically, the
Okay,
red zones are indicating that there were initially a resistance at some point. So you can see price came up, it found resistance, and then came all the way back down. The green zones just mean that there was support at some point, but they're
got it.
interchangeable. So when price passes through them, the resistance can become a support, and then vice versa. If price crosses below the support, it can
Right,
just the resistance. So the colors are just there to indicate like what they began as, but it doesn't necessarily mean anything any after that.
right. So red began as resistance,
Mhm.
and green began as support. Okay,
So I'll show
and
you
then
right here. Like this is a
yeah,
perfect example because you can see that price came up right here, established resistance, it came down, established a support. So like for example here, if we were to just look at it from, or let me just, I'll draw the zones there first. So initially it was a resistance right here. And then initially this was a support right here. So if I go and just turn this off, and then I go and rewind to like this point right here, this is like a perfect example because right here you can see it was a resistance, then a support. As soon as price broke below,
yep.
it
Mm-hmm.
came back up for a retest of the structure on the next candle, and then it came all the way back down. So this turned from a support into now a resistance.
Right. And so, and basic, just in terms of for setup, so before you'll draw your, before the session begins, you'll put your rectangles on there, and then you shut down the SR2 just to clean it up so you don't have all these lines, right? Because once they're drawn on there, they're there and they
Exactly.
show up on, and do they, okay. And then, so, right, the so the snipe strategy is the wick rejection off of any, is it any K1 through 4 pivot? Because on this 10-minute strategy, do you have all 4 of them on?
That is correct. So for the snipe, I have all of them on, and basically what we're looking for
Okay.
here
And by the
is
way, I'm paying attention. I'm typing notes on my phone because I'm on my laptop, so I've got full screen. I was taking notes on my computer, but I'm just going to tape them on my phone so I can see better.
okay,
Um,
no problem.
okay, all K2 pivots. Right. So if you're if you're looking for a buy, you're going to reject. If you're looking for a snipe buy, the price is going to be above the pivot. It's going to come down. The wick is going to cross the pivot, right?
Oh yeah, it'll touch it or cross it, whichever. You're just looking for a rejection in that direction. So if you have like you said, if you have a buy signal, you're looking for price to basically come back, reject off it, like make some sort of deflection off the pivot structure, and you're just using that as a double confirmation, because the strategy before, it was only off the in the past we didn't have the SR indicator. This is something that I created like last December. Before it was just a pivot. So what we would do is we would just look for a deflection off the pivot. And that strategy was still, it was a high percent, it was still a high percentage of winning, about 70%, but we wanted to make that better. So that's when I created the new indicator. So I added a double confirmation. So, if you get a wick rejection off a pivot and a structure, odds are it's probably going to bounce off and come right back down. So for me, I'm always like progressing the strategies. We start off with something.
Right. You're adding confluences to increase the percentage of the trade's going to be successful. Right. Exactly. You keep trying to you keep trying to make them better to increase the winning percentage.
Exactly. Because I hate losing trades. Like I absolutely hate losing.
I can tell.
So,
I can tell how frustrated you get.
Yeah.
Okay. So let's because I think the wick rejection off the K2 pivot that does not touch the candle body to me suggest. So let's just maybe if we go through a couple of examples. I think there were a couple that you had this morning, but I think that would be helpful.
Yeah, definitely. So I'll go to the most recent one, which should be right here. I'm just gonna go and draw the zones here so that it can clean everything up. So I'll just you can see that we have one right here. I'll just delete this real quick so you can see that this red one right here is what I drew, just for demonstrational purposes. And I'll turn off the K2SR so it cleans it up a whole lot. So what I'm gonna do is I'm gonna go and rewind to here, and this is the one that I think one of the guys caught this morning. I remember.
Really, like it's extremely risky, but it's technically a valid signal. That's I think what you said.
Actually, it was this one over here because I remember it was like around 8 o'clock. So it was actually this one up here. So I'm just gonna go and draw my rectangle over that. We'll go over both of them. So let me just turn this off right here. And what I'm going to do is I'm just going to rewind to.
And this one, sorry, Shawn, interrupt, but so you only have the I think K3 and 4 pivots on.
Oh yeah.
So
turn it back on. There you go. So now we have all of them on. All right. Yeah. So for this one, we use all of the pivots. We use 1, 2, 3, and 4 because we're just looking for those confluences and confirmations to look for those entries. So. This is the example that we saw this morning. I think it was Justin that caught it. He mentioned it, and he actually caught it. It was funny because he said he wasn't going to take it, and then a few seconds later, he shows his profits, and I'm like, oh, I thought you were gonna take it. And he made like about $1,000 off this, so that was a nice entry. But yeah, looking at this right here. So for the first requirement, you just want to confirm a wick rejection off any of the K2 pivots. So looking at this wick right here, you can see that it's rejecting off the green pivot, which is pivot 1, and the red pivot, which is pivot 4. You just want to go for the farthest one off, just so that it shows you what's stronger, because it goes, in levels of intensity. So like level 1 is green, level 2 is blue, level 3 is orange, and level 4 is red. Red is going to be the strongest one because that's as far as it goes until it goes into a reversal. So you can see right here, price was going up, it crossed below here, came back for a retest, and then it shot all the way back down. So.
And on the one of my questions was what is the difference between the four pivots?
Yeah, so it's just the level of strength. So if you go back to look at all of the other pivots here, you can see that price will come over here and it'll like lightly touch the green and blue. That's why generally for the other strategies we don't follow the green and blue because they're too weak of a pivot. Because you'll see price come and it'll bounce right off it. But if it bounces off the red or orange, that's where it becomes really strong. So that's
got it.
Yeah, and those are just the degrees of strength with regard to the pivot.
Right, and so the only strategy where you really need them all turned on is the snipe strategy.
Basically, and there's also the original pivot strategy. I'm not sure if you came across that. We don't really use it as much because we just kind of simplified it a bit. but the original one used all of them. That was one of the very first pivot strategies that we applied. That was like, we started using that, I think 3 or 4 years ago. And then from there, we just progressed to these other strategies. It still
Got it.
works.
Yeah.
Yeah, it works fine, but it just has a weaker win rate. So it still works
Right.
fine. It's still above like a 70-60% win rate, but obviously we started adding these other things in there that made it a lot better.
Right. And I think for me, where I am in this process, to focus on your three main strategies and maybe the daily strategy for now is, and get those down and start having success is probably what makes the most sense. And then if I'm interested in the older strategies, to go through that. When you say that, that probably makes the most sense.
Oh yeah, no, definitely. It's because so the reason that we use those before is because a lot of people they don't like this fast paced trading. They like something where it takes like days, hours, weeks
Mhm.
to make those trades. And if you want to use those older strategies, those are the ones that you would use. But now the markets have changed. The market's always ever changing, where the market just became a lot slower post COVID. And with that, you start to use different strategies. The other ones still work. It's just they're just different variations to what we currently use.
Right. And just on the, well, on step one here, as you said, it just needs to, it doesn't necessarily need to cross it, but it could come right up to it and then reject off of it. It's just clearly showing it tested it and it rejected it and it came back down, right? In terms of that's what, and then on off the K. So I see that, and then then it hits the zone, right? I
Mhm.
mean the SR zone comes back down, and if the candle, so if that candle body was in the SR zone, it would not be valid, correct? Is that
The body is fine for the third requirement. This is a question that we get a lot. So like for this right
yeah?
here, a lot of people get confused with the confirm wick rejection off K2 pivot does not touch the candle body. So for this requirement, you just want to confirm that this pivot here isn't touching the body. The SR is fine. It could be touching the SR, but the main thing that you want to look out for is that the candle isn't touching the body.
Can you maybe, Shawn, can you find, I mean, can you find like an old one that where it would have hit 1 and 2, but not 3? Just to,
Oh
so
yeah,
I mean, I think I understand what you're saying, but is there something where it shows that, okay, this would have hit 1 and 2, but not 3?
yeah, no, definitely. Let's see if I can find one over here. Let me look real quick to see. Um, let's see. This is a buy right here. Let me go over here real
And
quick.
can I ask you questions while you're looking, or will that distract you?
Yeah, sure. No, that's fine. You can ask me a question.
Like when do you just start looking for this as well, right on, for like based on what I want to like trade? Like obviously I'm up before 6:30, but I like with this strategy is that you're not entering until New York session open until 6:30, correct?
Uh,
You're
for this, you can actually use this all day. I usually use this all day. This
okay,
this is what I use during Asia session. So at night, sometimes I'll take like a random trade and I'll say I made a profit off it. Generally, what I do is
right,
I'll look for this. I'll look for an actual entry off the snipe, right? At
got
night.
it,
And then say if there's one that's currently running, like say there's a sell snipe that's currently running, and then I go
Mhm.
down on the 3 minute or the 1 minute and I look for a scalp that's within that actual snipe.
Right,
And then that's where I catch that move because it's like a double or triple confirmation because you have a strategy that's within the strategy. So it gives
right.
you a better confidence as to what direction price is going. Because if these two line up and they're the same exact thing, odds are it's probably going to hit.
Right. And so if you're like, because I see, yeah, for me, if I'm going to trade, sometimes at night is fine. So if you're going to trade Asia session, does that open? Is that what time does the Asia session open? Like for us on the West Coast,
Yeah. So for
what
Asia,
time do you start looking?
you can technically start looking around I think 3 o'clock. Yeah. So 3 o'clock is like
Mhm.
when the Australian market opens. So they're technically they fall under Asia session. So that'd be Australian market. Some people have actually done the breakout off the Australian Open. So
Oh, really?
I haven't done it myself. I think it's too risky because the market is just reopening. So I personally don't like it. But I've seen other people do really well doing that. I know, people like to experiment in the group. Like there's always some people who do things differently and it works for some people, it doesn't for others. But for the Australia market opens at about 3 o'clock because the Forex market closed, or no, the US 30 market closes for New York session around 1:20, around 1:20, 1:30.
Hmm.
And then it closes, reopens at 3 o'clock, which is the Asia market, the
Got
Australia.
it.
So
Right.
the
So you have some more volatility. I mean, when that there's just a little bit more, just more activity in the market because even though it's not to the level of New York, but you still have people who are starting their day and trading.
Exactly, yeah, because the actual Asian market, which is Tokyo, opens at 4 o'clock our time. So that's when the Japan market opens. And that's like where the bigger wave comes because it'll happen from, Australia is such a small country, so it's not as big as US,
Yeah.
obviously. They have their little market that opens there. And then people in the Asian market, they have pre-market trades during Australia, because that's when the news starts coming out of things happening in Australia and stuff like that. So the Sydney market opens at 3 o'clock our time. 4 o'clock is when the Tokyo market opens. And then that goes on until midnight. So midnight is when the London market opens.
Well, London, got it. And you'll never, I mean, probably not up, but you'll never, because if we're getting up at 6, you'll never really trade London, right?
Yeah, and I personally don't. I've done it before. Market is pretty volatile during London. The best times to really catch high volatility is the crossover. So for us at 6:30, that's the
Right.
crossover between London and US. So at 6:30, that's when London is closing and US is opening. So that's when people in London from London are closing out their trades while we're opening them. That's why there's so much volatility where
Right.
price up and down really quickly.
All right. Well, I guess let's just maybe see a few other valid snipes because I think I know what you mean. I think it basically is just saying if the candle body is touching any pivot, it's not valid. It
Exactly.
has to be. It
Yeah.
can't close where you've rejected off of the the pivot. You've rejected off. You're below an SR zone. But if, for example, if you rejected off of pivot K1 and then came down, if the candle body was crossing K4, it's not valid.
Exactly. Yeah. You just don't want the body to be touching the pivot because if the body's touching the pivot, that wouldn't be a clean rejection, right? That would kind of indicate that price might be crossing the pivot
Right.
and going the opposite way. So that's just, I mean, that was actually a new requirement. Like when we started losing a couple of trades, like whenever we start losing trades, that's when I start to go into like a deep back test and I try to figure out, where do these trades start losing? And what I started to notice is that when price was touching the actual pivot, because it would show that that price would be reversing from that point instead of rejecting. Because you're looking for two things. You're either looking for a rejection or you're looking for a reversal. So when price is actually touching the pivot, that might indicate that price is attempting to shift in the opposite direction. So that's what you're avoiding.
Right. Right.
Mhm. Yeah, and going back to like the original strategy, like I've seen a lot of people in the group where they just remove, requirements that they don't like, which is, it's completely fine, but it goes against what the requirements are. And they'll have more entries, but it also increases the risk because they're taking more entries that are not
Yeah.
as quality.
Yeah. No, I mean, I've learned my lesson the hard way. But I think that's the only way. Sometimes the only way to learn is to suffer a little bit of pain and to because I've said, my friend Brian, like, if this turns into gambling, I should quit because if you're not following the strategy, that's what you're doing. You're gambling, particularly when you've only been doing it a month.
Oh, exactly. Yeah.
So,
Yeah. It's a cost education, pretty much what you're
yeah,
doing.
no, I mean, and it's just, and I think, well, I think the next thing that, and I think you've kind of answered this, in, the sessions I've watched, which is, and I think this just comes down to a time thing, which is holding on to I mean, I think probably what most novices do is they sell out, they sell, they take less profit and they get out too soon, but they hold on too long, right? Because particularly if you've been a little bit gun shy because you've lost, your instinct is I better lock in my profit before it goes away. And I think that that's one of the things with the strategies, at least where which they basically all have fixed TPs, right? I mean, clearly the breakout has 2 levels, but you think that just takes time to have the confidence to hold on to a trade, and then and understanding outside of the the core requirements, what are the extra confluences that might give you more confidence to hold on versus pull out early?
Oh yeah, no, definitely. Yeah, that's actually what happens to a lot of people. They exactly what you said. For winning trades, they don't hold it to the full TP. They end up closing, with partial profit. But then when they lose, they don't close out when they're supposed to close out. They
That's
hold.
exactly what I've done like 4 times. And I'm like, you idiot, why do you keep doing this? You know?
And that's the main problem, because the thing with these strategies is that we're using, proper risk for trade. So like, for example, if you're doing the snipe strategy, it's a one-to-one risk reward. So if the
Yeah.
strategy has, X amount of win percentage, as long as it's above a 50%, you're always going to be guaranteed to be having more profit than losses. And same with the snipes, I mean, not the snipes, with the scout strategies, they're a negative risk reward, but they rarely lose. Like they lose maybe, once every.
Right. That's why you can, I mean, the reason, because obviously if you have know nothing about the strategies and you're just listening to people talking about trading, they're like, you should never have you should always have like a 2-to-1 risk reward, right? But that doesn't take into account probabilities, right? Which is what you're doing. You're saying, well, let me take into account probabilities in this. I can do this because you back tested it, and it doesn't matter that it works. It's like the risk management works.
Exactly. And that's why I always tell people that, there's no right or wrong way to trade. As long as you find something that works and you're able to repeat that process over and over again, at the end of the week and at the end of the month, year, you should always be in profit regardless.
So do you think that just becomes down to, as I said, holding on? Like, there's not really any silver bullet to say, here's what you need to do in order to hold on. You just kind of need to trust the strategy and
Exactly.
and
It's wearing thick skin basically to hold on to it. So like for a lot of people, what I do recommend is if you're having that issue where you can't hold on, what I do recommend is just to let it run to your profit target. That's going to be the biggest, and by doing that, when you start to win more trades and you see your profit actually grow by letting the trades run, that's when your confidence starts to build up and you start to trust it. That's the main key. Because I've seen there's been a lot of people in K2 who have been part of K2 for a couple months, if not a couple of years, and they had the same situation in the beginning until they finally just, they were on their last straw and they're like, this is my last chance. And they started to just let the trades do what they were supposed to do. And they're like, wow, this actually works. I should have been doing this entire time. And now you'll see them in the group. These are like the best traders that we have so far, that are, consistently locking in profits. And they weren't always like that, like maybe a year ago, or maybe half a year ago. But now that they've actually gotten down the trade psychology and trusted strategies, they're able to do this consistently every single day.
yeah. And I think, like, for me, as I think said before, when you say something is pretty risky, based on where I am, I should either stay out or just do those other things I mentioned, right?
Yeah.
Because yeah, when you do have a couple losses, it does begin to, like anything, it does begin to shake your confidence. Let me just see if on FTMO. Okay, so as I said, I started with like this 20K account that I've lost 3 grand in, which is my personal. And it's funny, initially when I first started listening, I'm like, why would I want to give 30% to FTMO? And then you go, well, because you don't have any, like, I've just lost 3 grand, as opposed to if you did FTMO, I might have lost $500 or $600 for my challenge account. So it's, I signed up, but I just haven't started it. I did it for the 100K account. Do you think should I just take some smaller lot sizes on my personal for a bit, get it down, and then start my FTMO? Or do you think, just start it and just be conservative and just follow kind of the strategies? Or does it matter?
I mean, it's really up to your preference. The thing with me is that I treat FTMO like a business. Like I'm not sure if you own like a side business or have any other, other things that you have like an LLC for. Because like for FTMO, you technically run it as a business because you get paid out as a 1099, like a self-employed. So you can literally write off all of your challenges if you really wanted to.
Oh, really?
Yeah, so you're basically doing FTMO for free until you finally get really good at it. And then once you get good at it, your profits will, your deductions or whatever your expenses will just cover, whatever taxes you owe at the end of the year.
Yeah. So, and you have to, there's 2 challenges you have to pass before you get funded, correct? You pass the first one, and then there's one more step. And then and it sounds like they do pay out. I mean, they pay out 70%, and it sounds like they're pretty timely on how paying
Oh
out their
yeah,
traders.
yeah. They're definitely the gold standard with funding companies. I know a lot of people have tried other companies. I've used Funny Talent. I only use that because one of our members that's doing really well kind of talked me into it. I was so against it for the longest, but I finally was like, okay, if I'm doing so well with FTMO, I might as well just copy my trade to this other company, and that's where the issues arose. But for FTMO, I've never had issues. They pay on time every month, and their system is very well organized. Their support is right away. They will respond to you through the chat, and they're pretty on point with everything.
Yeah, and actually, I want to ask you this: how do you? I mean, I know you say I think you have two FTMOs in your personal, right? Like in that, it seems like you're able to execute a trade on all of them at the same time. Like it seems like you place it, and you're not going, I got to place it here and here and here. How do you do that?
So I use this here, let me split it up for you. I use this platform called Social Trader Tools, and this is what everyone else in Case uses as well. So this is the website right here, socialtradertools.com. Basically for this, you'll have like a master account. So for my main FTMO account, I have that as my master, and then I have my second FTMO, which is my copier, and then I have my personal below it as well. So it's kind of like a tree, right? Like I have like my two accounts that copy what the first one does. So whatever my first one does, the other ones copy exactly what I do. So if I enter,
okay.
Yeah. So if I enter a trade, the other ones will also enter the trade. When I exit the trade, the other ones will also exit as well.
Got it. I'm sure that with trade, so if I'm doing FTMO, I'm going to do MetaTrader 4. And so if I'm sure TradeStation, I could do it on, it should be able to execute on both. I mean, it should, right? I should be able to.
So that's where it's a little different because well, there's probably a different copy that you can use. For me personally, with Social Trader Tools, there's only I think there's only two platforms that they support. They support MT4 and they also support CTrader. That's another reason why I haven't gone to TradeStation to trade directly with them, because if that was the case, it'd be so much easier to just trade directly off TradeStation, or TradeStation account onto TradingView and just directly copy my trades from there to my MT4s. So I know there's ways to do it, but it's not something that I find reliable. So I do have I have a coder where he kind of does this webhook thing where whenever you execute a trade on your TradingView, it'll copy over to through some cloud, and then it goes over to your MT4 and it'll execute it on there as well. But these trades move so fast where if you miss it by a split second, that could be the difference between winning and losing a trade. So for me personally, I just stick with MT4 right now. I just want to keep it like straightforward and straight to the point where there's no loops and holes that I have to climb through to execute the trades. So I don't think it would work cross-platform like that.
Right. And then because you have your trade views on one screen, and you have your MetaTrader 4 in another, which is where you're executing. So it's very easy for you to execute. You don't have to go to another window. And then, so for your personal, because is there like a broker dealer because MetaTrader 4 isn't a broker dealer, right? They're just
it's just a platform. It's a platform where you can connect your broker to. So for my personal, I use Hugo's Way. Not sure if you've heard of them. They're an unregulated broker. But I haven't had any issues with them, so that's why I still use them. But since they are unregulated, I don't keep very much funds in the account. So what I do is I just keep I keep a couple $1,000 in there, and then what I do is I just take the money out whenever I go past my threshold. I think my threshold is like 5,000. So if I ever go over 5,000, I just withdraw it, because I don't need a large amount in there, because most of my profits come from FTMO. My personal is just like extra funds, that I just kind of just take whenever. There's not as much risk on my personal versus my FTMO. Like FTMO, I'll be risking a couple $1,000, and then for my personal, I'm probably risking like up to 1,000. Nothing like that would make me sick if I was to lose a trade, right?
Yeah, no, like I've felt the last 2 weeks. But and that's why, I mean, because it's leverage, because FTMO, I mean, you have unbelievable, it's already leverage in trading, you know, futures or indices, but then when you have someone else who's funding you, and it's funny, I was looking at, if you're a pretty frequent trader on TradeStation, unless you're trading a certain amount, the commissions and fees can get pretty high. And I was like, gosh, so because initially 30% sounded like a pretty big percentage from FTMO, but if you start looking, you go, actually, the benefit of not risking your own money is it's a no-brainer to like, I would, to give 30% versus the downside from, you know, keeping 90%, right?
Oh, definitely. Yeah,
So
100%. A lot of people don't realize that. And it's always, you know, the people that usually don't realize it are the people that aren't actually profitable. Like they're jumping too ahead. They're thinking ahead of like profits that they could have
yeah,
made before they even make it.
yes,
And I'm like, okay, but you know, there's a big difference here because you really are not risking anything. Like once you get funded, you get refunded your deposit fee, so you basically get the money back because now that at that point they trust you, and then from there, you just keep your your 70% profit, and then they let you keep a total of 400,000 total. That's why I have two accounts. I'm able to merge them, but the reason why I don't merge them is for days like where it's risky. So if it's a risky day, what I'll do is I'll copy the trade. And then if I feel like, oh, this is a risky trade on one account, I'll close one out. So I'll lock in my profits. And then the other one, I'll just let it run. So if I lose that trade, it's fine because it would have covered it with my other profits versus having a double loss.
well, actually, let me, the FTMO stuff, I can ask those questions later. I want to make sure I get my other questions in here. Like in terms of like we'll call it the technical bias on all three time frames.
Mhm.
So clearly for the breakout strategy, we want to make sure on every, on 1, 3, 10, that everything is, and it's really trend meter, candles. I mean, obviously you don't necessarily need the momentum, but all of that, right? It's really about the trend meter and the candles and the last K2 momentum all being the same as far as confirming the technical bias on all three time frames.
So for the technical bias, you're only looking for the main thing that you're looking for is where prices with regards to the
Oh,
pivots.
pivots. Oh,
So
got it.
yeah, the trend meter is actually extra. It's not really necessary because you'll see that sometimes right here, when the trend meter does turn from red to blue, it just consolidates. It goes sideways, and then even when it turns green, it just goes up slightly. So this is
Right.
it's a final confirmation. It's like an extra confirmation. The main thing you're looking for is just the
Pivots and candles.
yeah. So pivots first, you just want to make sure that price is either above or below the
Yep.
pivots, and this will just confirm that price is the current trend is trending that direction. So that's what you're looking for, like you mentioned, the 3-minute, 10-minute, and 1 minute over here. That's going to be the main thing that you're looking for. And then if you want to be a little more careful, like how I am, that's when I start to add in the trend meter because I'd rather have a double confirmation than just one. Or at least, at least if I see that the trend meter isn't matching, that'll kind of give me a hint that, hey, this might be a risky trade, right? It gives me red flags. So for initially, you're just looking for where price is with regard to the pivot. But then if you have the trend meter where it's also red, that actually gives you more confidence. It gives you red flags, but it also gives you confidence because if it's trending that direction for the trend meter, for the pivots, and with regard to where price currently is, then it's going to give you like, okay, in this situation where it's red all around, your confidence for it to go down is going to be really high with regard to technicals.
Right. And then in terms of, so it's the technical bias really then is just the pivots. As long as whether the trend meter in terms of the candles, like with the size of the width of the candles and the size of the wicks, like the trend meter, those are just things to say, like if you've got, really strong candles, which to me, I guess a strong candle is not super huge, not super short, like decent size with short wicks, whether they're on the top or the bottom, right?
Exactly.
Clearly for a sell, better to have the wick on the top than the bottom, but those are just all like extra confluences, right?
Exactly. Yeah. Because you can, if you just look at the candles here, especially on the 1 minute, because the 1 minute, there's so much noise on this time frame. where you'll see these wicks here. You'll see wicks from the bottom and from the top, and it doesn't really mean anything. It does mean something as a grand scheme of things, but just looking at the candles by itself, it doesn't really mean much. But yeah, like you said, if you're looking for a sell, then the wick on the top side is completely fine. That's a good thing because it shows that price came up to that point and then it pushed back down. So it's giving me like a bit of a storyline of like where price is going. Vice versa, if you're looking for a buy, you're okay if the wick is below the candle, because it's indicating that price was initially below there and then now it's pushing back up to the upside.
But if as long as you have a short wick, whether it's on the top or bottom, it doesn't really matter as long as, right? It's just kind of ideally it would be what we just said, but it wouldn't prevent you from taking a trade to it's really just about the length of the wick relative to the body as opposed to the direction of the wick, right?
Oh, exactly.
Whether it's
Yeah. So the main thing with the wicks is that you don't want to have any decisiveness in your analysis, right? Even with your trades, like if there's any hint of indecisiveness, it's gonna make you nervous, and you're not gonna be sure whether it's gonna go in your direction or not. But if you have no wick there, or if the wick's really small, then that's normal because price is gonna go up and down regardless. It's just if the wick is too big or there's big wicks on both sides, you really don't know where price is actually going to go. So that's where it gives you an even bigger red flag where, okay, maybe I should just hold off on this before entering the trade.
Yeah, I don't know if it was yesterday or the day before, but those wicks in the breakout were crazy. They were like 3-4 wicks that were just huge.
Yeah, and then the body of the candle was so small, so it wasn't really making any movement. It was kind of just bouncing back and forth.
And is that, I mean, because I've been doing that a while, and I don't know, like, because you've been doing it, you realize this makes me, and basically I could tell from you, like, this makes me very uncomfortable right now in terms of taking a trade and the risk associated with. But is that more unusual? Do you have like more normal wicks, or does that happen pretty frequently?
Yeah, so that's actually really unusual because from 6:30 to 6:35 when we take those breakouts, usually that's when the market makers and institutions they're making moves. Like the big banks are choosing the direction. So if they're choosing their direction, they're going to push price in a certain way. When price is going back and forth, that means that there is really no direction that's being set at that point, because the big banks, they're making big bets. They're making like $1,000,000-billion bets. So they're pushing price in a certain direction. If price is going back and forth, that's either like some sort of bidding war between banks. But in a situation like that, banks know what they're doing, right? They're all well connected. They all kind of agree on one thing because they all want to make money. They're not trying to fight each other to win or lose money, unless there's something personal going on or something within those, between those banks. But generally, market makers and institutions, they're all within their elite circle where they agree to something. They're like, okay, we're going to push price up today. We're going to push price down today. And they all do the same thing. So when you see those wicks, that just indicates that either they're not in the market or there's something going on behind the scenes where they're going to create some sort of manipulation. Like this morning. So this morning, the stocks were completely green. There's no, literally no reason for it to drop. It just makes no sense, right? Because the entire stock market was green. Even CNBC was reporting that, the Dow was up 200 points. And then all of a sudden it just comes straight down. And that's like a clear manipulation there, because if the stock market is completely green, there was some sort of whale in the market, some big investor or some big bank that just basically wanted to screw everyone. So they let price go up. They let the news outlets pretty much make everyone think price was going to go up. And then all of a sudden it just crashes down for no apparent reason.
Right. And so, because by the way, I felt good for a minute because I got into the breakout and I got out pretty quickly. Right. And so I made a profit. And then I was listening to you, but I wasn't listening to you, meaning I was listening to you saying all the fundamentals seem green. I expect there to be a retracement. And so I just was stupid. And I just I was trying to pretend like I knew what was doing by looking at some consolidation and thinking it was going to the consolidation was going to be support and it was going to go back up. Right. But it never did. It kept doing this and it would dip. So what prevented you from not doing anything in that today in the first 15 minutes?
Oh, like not entering.
Obviously, I guess it's really just the first 7 minutes because the breakout is only for the first.
5 minutes or so. So yeah, for that breakout this morning, let me go back to 6:30. The reason why I was not inclined to take the breakout like, as a normal position was that I started to see the wick on top, just like how we were discussing earlier. So just looking at this right here, you can see price was going up from 630. This is actually the first candle where market opened. It was going up, but then you see this huge wick on the top side, right? Big wick
Mm-hmm.
right here. So this is what we just discussed. The wicks, they don't really matter too much if there's like a normal size wick, but if it's a huge wick and it's bigger than the body, this is going to hint that, hey, there's probably going to be a reversal coming sometime soon. And this is when I'm
Right.
telling people, like, you probably shouldn't take this trade because there's probably going to be some sort of retracement. I didn't think price was going to completely reverse, but I knew there was going to be some sort of retracement back to where price opened from, which would be somewhere around this area. Because that's normally how the market moves. I've been trading the same strategy every day for like the past 3 years. So I've become accustomed to like how price moves normally versus when there's manipulation in price. So looking at this right here, I was like, okay, price is probably going to come up and then come back down. And then from here, this is where it started to be more apparent that price was getting tricky because you see the huge wick on the top side right here,
Mm-hmm.
and then you see the huge wick on the bottom side right here. So this creates an imbalance in the market. This kind of tells you, hey, like, we don't know where price is
Mm-hmm.
going because they're pushing it down. Now they're pushing it up. And then you look from the next candle here,
Mm-hmm.
and then you just see another big candle, right? Another big wick. And then I think from this point, this is where it just came crashing all the way down. And I think this was a trap because I think what I was anticipating some sort of retracement. What a lot of people, if they were anticipating the same thing, if they were to see this, they're like, okay, the price is probably not going to come right back down. So people probably would have entered to a buy at this point. But
Mm-hmm.
then that's when the market makers were like, okay, we've got enough people like in this area here. So let's just dump price. And that's exactly what happened. They dump price and then they stopped everyone out. And that's how they make money because what happens is they dump price. And then when people get stopped out, they need to convert, the buyers to sellers. So the big banks and institutions, they take the sells and then they make money on this huge drop right here.
Yeah,
Yeah,
and
yeah, it's just
and
like,
it feels, yeah. Yeah, and it feels to me because I know that I watched one of your, I think, an interview that you did, and which I thought was really interesting because like you're like my strategy is based on momentum, right? Like you're trying to read momentum, and I feel like I've gotten like the trades I've taken myself, I've actually been against momentum. Like I'm trying like the hoping like in this circumstance going okay it's going to retrace, and so I think what for me is like learning how to know when the momentum, and I know that's what the K2 momentum is intended, because actually clearly if you on this, it wasn't a scalp because it was within the breakout time, but it dropped pretty heavily after it hit the K2 momentum indicator turned
yeah,
red.
exactly. And if we weren't even looking for the breakout at this point, like say this was like, middle of session and we actually caught this
Mm.
right here, this technically would have been a 1 minute entry if we were to take a scalp because it was a valid sell signal was below the pivot. So if you took that right there, that would have been a nice profit. I know there was one member in the group and he because he's been around for a while and he knew about the daily strategy. So what he did was he actually took this and just let it run, and he locked in like well over 4,000 pips because he just
Oh,
let
right.
it.
You meaning he took on the 10-minute, he saw that it was a sell, and then he goes, okay, well, I'm going to just what you said earlier, I can take some smaller scalps because the 10-minute is showing it's a valid sell, so I can just do some scalps. That's basically what he did.
And that's exactly what he did. Yeah, he just took the scalps within it, but he also took the 10 minute and he just let that thing run, and he just kept trading with like he just kept going lower and lower. And he was fine with him like losing, like he was just going to keep going until he lost the trade, but he actually never lost it. So he just kept stacking up the profits from he just kept adding on more trades. So he did the snipe, he did the daily, and then he did the scalps within it. So he was just adding on trades on trades on trades. And then he was just going to keep doing that until he lost, and then he just never lost, and then he just had a huge profit at the end of the day. So
And
oh, go ahead.
I was just going to say, because is that like, so if all of a sudden you got a green candle, okay,
Mhm.
would that mean like on the daily that could trigger you if you're in a sell? I mean, if the daily was for the sell and you get a green momentum, do you start going, okay, I might want to close out now? And does that kind of invalidate your ability to do these additional trades. You know what I mean?
Oh yeah, yeah, no, no. So if I get a momentum signal in the opposite direction, it's not going to invalidate it. What would invalidate it would be the other confluences, like would be the fundamental analysis and the retail sentiment. The main problem with us like determining a direction, for this entire session or for this whole week, is that retail sentiment hasn't been one way or the other. It's been around the 50
Yeah, it's
mark, and it's never been like that. Normally, it's like that maybe for a day, but not for an entire week. Usually, it'll just go there, and then from that point, it'll start shifting one way or the other. And that's usually where we have the best confirmation, because generally you don't want to trade where everyone else is trading, but without that there, or with it just being flat, it's really hard for you to determine, which way price is actually going.
right. So if you're on if you make a trade on the 10-minute chart,
Mhm.
then and you're with the obviously with the your fixed TP and stop loss, even if you get a green K2 momentum, as long as the fundamentals are still like say signaling a sell, and as long as you can say continue to be, I mean obviously you're going to be below the pivots, then you can stay in that trade. It just, if the fundamentals start to shift, it's where you might want to close it out. But a K2, you're just saying a K2 momentum by itself doesn't invalidate, like on to say if it's the daily strategy or on a 10-minute snipe, it doesn't invalidate the prior sell. It just, is that right?
Yeah, yeah, exactly, 100%. Because so like I mentioned, like this is all based off momentum.
Mhm.
Just because you get an opposite signal, that can just indicate that it's some sort of pullback or retracement or even a
Mhm.
manipulated move, right? So what happens sometimes is, say you'll be taking a sell right here, and then if you get an opposite signal, I don't think we get one here, but if you did get one, generally, like if you get a big spike, sometimes you'll have like where price is going down heavily, and then you'll get a big green candle right here. And
Mhm.
what happens is people think the same way that you just think, right? Like you said, oh, will that invalidate the trade? For some people, if they see that big candle, like, okay, they get scared. And what they do is they flip their position in the opposite way because they think price is going to reverse. But when you least expect it, it just comes all the way back down because it's just some sort of
Mhm.
trap. Like the way, that's why I don't really put too much emphasis on technical analysis, because I feel like technical analysis is just, it's just where a lot of market makers and institutions like to trap people. Because what they'll do is they'll just put a big
Right.
order to buy. They'll eat a small little loss there, right? They'll spike it
Mhm.
up to try to trap people. And then what happens is a lot of retail traders like that are unexperienced and they haven't seen this before. If they see a big spike, they're like, oh, price is going to reverse because price is probably like if you see a big green candle, it'll just spike above the pivots, and they're like, okay, price is probably going to swing back up. And there's a lot of different theories as well, because US 30, this is a directional asset. This asset usually doesn't go down. It usually just keeps going up. So what happens is a lot of people like to buy the dip. I'm sure you've heard the term, people are like, buy the
Yeah.
dip. And then they're like, yeah, some people buy the dip, but it just keeps dipping, and then they like,
Yeah. That's
yeah.
what happened to me today.
Exactly, yeah. So for me personally, if I ever get something like that, I usually don't act off emotion, because that's all off emotion, right? Because you see price go the opposite way and your emotions go crazy. You're like, oh crap, should I pull out now? And then what
Yeah.
happens, you pull out, and then it just keeps going down further, and you're like, I just threw away all those profits that I could have just added on to it.
Yeah. And then the one time today when I'm like, because I was revenge trading. That's what I was doing.
Mhm.
Guilty. I did take a sell at one point, and then of course it popped off, and I'm like, I'm buying it. I'm shutting my computer. I've already lost enough today. I don't want to lose any of it more. I'm not doing any strategy. So, and I know we're at time, and
No,
I'll,
that's
I'll
fine. Me
probably
too.
reach out to you in a few weeks after for another refinement session, because this is really really helpful. So I appreciate it.
Yeah.
So on the fundamental bias, in terms of looking after the breakout, in terms of looking for scalps or looking for snipes, if the fundamental analysis is obviously pointing to direction, that's all you're going to look for. Like if the fundamentals are all for a buy, you're just going to be looking for scalps and snipes that are buys. You're not going to, because even if the technicals showed something that was valid, are you not going to take it,
So
or can?
yeah, so what I will do is I'll always pair the fundamental analysis with the retail sentiment. Those are going to be the two main things. So say if the fundamentals are bullish, right? Say it's like above like 150 points in the green, but you see that
Mhm.
retail traders are short, like it's 70% short. If that's the case, then I'm only looking for buys because I want to go opposite of everyone else. Um, if it's fundamentals are up and the technicals are up and retail sentiment is up, I'm probably not going to only look for buys because that can be
Okay.
because it could be like a trap, like I was saying before. Because sometimes they do that. Sometimes if it's like if like today this morning everything was all green, right? But price did the complete opposite because they were just manipulating price. So when everything is, if it's too good to be true, it's probably too good to be true, right? It's probably not going to happen. Like today, it was, it was everything pointing towards the upside. So it looked like it was a guaranteed, you buy and you'll become
Yeah.
rich just by letting it go. But it actually did the complete opposite. So the main thing is I look at would be fundamental analysis and the retail sentiment. Technicals would come last because obviously the momentum will point in the direction. But for the most part, you generally want to be trading the opposite of everyone else. That's like
Right.
the key. Um,
Right.
yeah. So
So got it.
that's the opposite direction that you're looking for.
Right. So the only thing that's going to, I mean, this is really, I guess, applies to scalps because you're not going to take a breakout unless you have the fundamentals, including the sentiment, are pretty clear. But once you get past the breakout, yeah, if the market sentiment, the retail sentiment is like it is today or was today, like 50, 52%, then you're going to kind of, and even if the Dow's up, as you said, not 150, but say if the Dow's up, say the futures in the Dow are up 50 or 70, you still can look for sells because it's not over 100 and the sentiment is not showing anything. And since the scalps are just intended to really get small moves and momentum, it's fine, right?
Exactly.
But you might not take a snipe on a longer time frame, or would you still be comfortable taking a snipe if you didn't have like the sentiment and stronger fundamentals?
Yeah, well, so the snipe's a little different because it's on a higher time frame. So you're going for like a bigger move and you have a bigger net there. So like even with manipulation going on, you can probably catch the snipe where it's going up and down, where it'll trigger your prop target before coming back down. But with the scalps, you're going for like such a tight move where
Yeah.
your stop loss is way too tight. So you don't have that much leeway for price to bounce back and forth before you'll either trigger one of your stop loss or your profit target. The thing with the snipes is that those will take maybe like 30 minutes to an hour for it to hit because price can just fluctuate up and down before it
Mm-hmm.
actually goes in your direction. But for the scalps, those generally hit within like a few seconds, few minutes, definitely
Right.
less than an hour. So there's just a bit of a disconnect right there between the two strategies. But the snipes, it'll be fine if you. I would out for the snipes. I would actually go based off retail sentiment, not off the fundamentals because the
Right.
fundamentals are real time. So, fundamentals will change within minutes or so. But with the retail sentiment, it's not going to go from 70% to 50% or go from 70% long to 70%
Right.
short within that time period. That's going to take like hours, if not days.
Right. So today, even though there was a snipe today, it's just a risky because of, well, everything today was risky because of where the sentiment was. Now, I know you've also like over 70 is really strong sentiment, but is it kind of anything over 60 like you feel pretty good about it? Like what's the like, is there a threshold where you like where you feel what's below what you feel good on? Is it
So threshold is generally around 68%. 68% is like spot on. Once you're
60,
yeah,
68?
yeah, exactly. So if it's like 68% short, I'm going to be looking for some buys because that's just indicating that price is going to start
Yeah.
shifting the other way. So I don't know how that number came about, but I started to notice it. Obviously, if you have anything over 70, it's going to be a lot better. But 68, that kind of seems it triggers as like a turning point for me because I'm not sure if that's like the same number that like banks and institutions use too. Because I know they have all this data, they know where everyone's trading. So I don't know if that's like the sweet number, the sweet spot number, but 68, it seems like once it hits 68, I can start drawing up liquidity zones. Like you've seen before how I've drawn the liquidity zones and stuff like that, right? Sorry, I think you might have disconnected again. Let me just message you real quick. Let me get some water. Hey, Roger.
All right. I think that was probably a sign that we're we're done. It's really nice connecting with you, Shawn, and I really appreciate all your guidance. I'm gonna practice some, and yeah, and then maybe in a few weeks I'll just I'll continue to have questions and refine things. So
Yeah, no, definitely. Do you have
uh,
any other questions like that are, anything that's really touching right now that you really need help with? Because I don't mind going over anything else that you need help with. Anything that could like, carry over till I guess the next meeting for when you have more serious questions. Because I think right now, you're still just getting things down. But I know like um in the future, like generally these sessions that I have, like these one-on-ones are meant for basically strategy refinement, or like what happens is like a lot of people create their own strategies using indicators, and I just help them develop their own strategies. But if there's anything that you really need help with to get you going even further, I'm available to just cover it now if you want to just go over it.
well, I gotta go in a minute. I do have a bunch of some other questions. Like I said, I don't mind. I think for me, that's like I have a long-term view of this. So just investing, I see this as an investment in terms of this one-on-one time to make sure that I'm really understanding the strategies. And I think I've got a lot of information now. I think from this, I think I'm going to kind of process it, revisit my notes, and then I think maybe yeah, in a few weeks after I've had another few weeks of kind of trying to execute the strategies, then maybe we'll have a follow up, and then hopefully after that I'll be good on the main strategies and all the nuances. So that's what I'm thinking.
Yeah, no, definitely. Yeah. If you have any other questions, you know where to reach me. So if anything, just reach out and let me know, and I can clear up anything for you. Because it's really, it's really just coming with the right questions. And I'm glad that you came with like proper questions, because generally when I do have sessions with a lot of beginner traders, they don't have any questions. So it's just me thinking of questions for them. But I'm glad that you actually came with questions. So it was a lot more streamlined for us here, where we can just, pinpoint what you need help with.
Yeah, yeah, because it is there's the I mean it's the strategy is the strategies are intended to be really simple, clearly. But I think there is just the nuance, right? And the funny thing is that I don't know if you're much of an NFL, like an NFL fan, or if you're in like fantasy leagues or do football pools. Are you
Mhm.
are you at all?
Yeah, I'm currently in one league, right, or two leagues right now for this season.
So there's this there are a couple different casinos in Vegas that have monster pools for picks where you pick 5 games a week, and like one of them is called the Super Contest. And it's like a grand to enter. First place is $1 million, and it's just you're picking 5 games a week versus the spread, right? And so because I'm somewhat of a data guy, like I have this I put together all this info, this like a little bit of a database in Excel, and I've been trying to like create some sort of system, and I've been doing it for the last 2 seasons. And after like listening to you, I realized it's too complicated. Like what I'm doing is way too complicated. Like I need to find like 3 or 4 things that have some sort of narrative for why they make sense, and then figure out like what are the extra confluences that should give me more confidence in taking those games, as opposed to having like really no strategy and just week by week trying to like filtering and doing searches on my database to try and find something that fits, as opposed to like come up with a strategy that's simple, come up with extra confluences, and then back test and refine. So it's interesting how this is.
Exactly.
We'll see how I do,
That's
but I'm
it.
going to
That's
try and apply it.
it. Yeah, no, definitely. Yeah, no, definitely. Yeah, and then that's I feel like that's how I approach life really. I have a plan and then just make adjustments as things go.
But
To refine, to reach that goal that you're reaching for.
yeah, and also, I mean, and I was also saying my friend Brian about this is like, and this is just me getting really hokey. It's like a lot of day trading, like a lot of the principles are like life, like there's support and resistance in your life, like, and 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 I was saying how like I can't even remember. But one day I was just going on with the analogy because I was trying to have a justification for why I'm spending time doing this other than just to make additional money. I'm like, it's a good life lesson, support resistance. So
Exactly.
all righty. Well, great chatting. We'll talk again soon. Thanks for everything, and have a